Greetings, Dwayne. It is Friday evening, 23rd day of October, 2015. Time now is 9:12 p.m. Eastern. And I'm going to do just a really quick recap of what happened with our Concierge trade alerts today. As you probably know, our free trade, which was given out yesterday, triggered today. And I'm going to show you that too. So why don't we start with the free trade, and then I'll walk you through the Concierge trade alerts, and then you'll be free for the weekend. You can go enjoy your weekend. All right, let's do it. Okay, at a glance, this is the entire week in the S&P 500 Emini Futures. Now, these are the current weekly trading zones. Okay. All week in the recaps, you've been looking at last week's zones, and I want to make sure you understand why I do that. You see, our clients and partners, they pay, part of what they pay for are the weekly trading zones, and for me to charge them and just then give them away to everyone else, well, if it were you, that you would be like, what? So anyway, usually by Wednesday afternoon, at the latest Thursday morning on the radio show, I go ahead and put up the current weekly trading zones, okay? So that everybody gets at least a day, day and a half to use them and trade off of them and hopefully, make some money. Now, all week I kept showing you last week's zones, and we talked about how price kept oscillating above that zone from last week. Remember, I kept saying, now it looks a little different because I've had to scale it a little differently to just get everything to fit on one page. But I would say, okay, we're above the zone, now we're below, above, below, above, below, above, below. We're oscillating back and forth, back and forth. Now, that's how it appeared to the world, that one zone from last week was in fact like a center of gravity that the market was oscillating around. But actually, the market was doing something rather different. You see, this right here is the Sunday night Globex Open, this vertical line. Price opened and came right down into a weekly trading zone, this week's zone, 2021/22, consolidated for 1, 2, 3, 4, 5, 6 hours, and then in 1 hour, went up to the next zone at 28.29. And then it took 1, 2, 3 hours to get back down to the zone below, consolidated for an hour, and then in 1 hour, made it all the way to the zone below. I'm sorry, hour and a half it was, to 2013/14. Now, let's just stop for one moment and think about what we have going on. From 2022, this zone right here, the top of the zone, it's 21/22. So from 22 up to 28, that's 6 points. From the inside to the inside there, so 6 point. That one candle right there in 1 hour moved 6 points. Okay, we together? Gotcha. All right. So zone to zone, down to the zone. Okay, and you can see that the zone, it hit that thing. The low was 2014.25. See the low of this candle, 2014.25. So it was one tick shy of hitting the zone. Now remember, I always tell you, zones are an area. We get accustomed to price, often, turning on a dime right at the zone. Don't allow yourself to be lulled into that false sense of complacency. It's an area, just like Fibonacci numbers are an area. Zones are an area, okay? Now, from 21 down to 14, 21 to 14, that's 7 points. So this zone, 6 points. This zone is 7 points. So we had 6 up and 6 down. That's 12. And then another 7 down. That's 19. 7 back up is 26. See how quickly it starts to add up? That's why so many of the partners like to trade zone to zone to zone. Because even when price doesn't make it all the way to the zone, like in this instance here, we got up to 26.75. So we actually missed the zone by 5 ticks. But if you're long off of even 24, when you get up to 26.75, that's that's 1 tick shy of 3 points. See, our daily goal is 2 points a day. If you're trading the 24/20 blueprint, if you come to us with the goal of becoming a professional trader and you say, I want to build a trading business, okay, this isn't going to be a hobby, not looking to get rich overnight. I want you guys to show me how to build a trading business, something that I can use to not only pay my bills and plan for my own future, but to plan for the future of my children, take care of their education, just the same things that you would expect from any business that you pour your heart into. So we go from zone to zone to zone to zone to zone to zone. So each move up in this zone, each move up is 6 points, and each move down is 6 points. Down here, when we have a move down, that's 7. Back up is 7. Back down is 7. So that was 7, 14, 21. Up here, 6, 12, 18, 24, 30. You follow me? See how that works? Okay. All right. Then we consolidate for quite a number of hours down at this 13, 14 zone. We overshoot just a little bit. Now this is, this zone is where we began the big run that carried us up into the highs today. So we spent the majority of the week here, right? It was on yesterday, the 22nd, that we made the run up. And then we got kind of quiet today, actually, compared to what transpired yesterday. So how many hours did I say that was? Did I count 13? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, about 13. When you see that much consolidation, it often tells you that the market is preparing to make a big move, all right? Some people call it coiling, as, you're coiling up for, like, how a snake coils up for a strike? Okay, that kind of thing. So I call it consolidation. Other people call it coil. Whatever you want to call it. It's like pressure building in a pressure cooker. And when it releases its energy, this is the type of move we often see. And so price in an hour makes this 6-point run again. Now, let's put that in perspective. 6 points zone to zone at $50 per point. If you're trading just one contract, that's $300 per contract per hour. If you had 10 contracts on in the S&P, let me just show you, in case you're new to the markets, volume. Let's say you're a 10 contract trader, okay? In that hour right there, there were 349,000 contracts traded. So is it feasible that you could come in and trade 10 or 20 even? So think about that. Now, you're not just going to come in and start trading 10 contracts, because if you do, you'll end up blowing your account out, and chances are you'll end up in that 90% line of the folks, good folks with good intentions, who didn't make it. Why? Because no one took the time to teach them, and they did not take the time to learn. This is why we start you out in the simulator. We teach you how to be consistently profitable before going live, and then once you go live, We teach you how to build your business one contract at a time. Yes, 24 months seems like a lifetime to a quote-unquote day trader. But trust me, 2 years goes by quite quickly, rather quickly. And what other profession could you go to school, earn while you learn, and end up potentially in that sort of an income bracket in 2 years? Well, nothing compares. There probably is no tougher job either. Trading's not easy. That's an understatement, but it can be simple. Depends upon your foundation. If you have a solid foundation, if you understand some very basic concepts and precepts about trading, then it'll never be easy, but it can sure be simple compared to what a lot of people go through and put themselves through. Once again, this hour here, we ran 7 points from 14 to 21. That's $700 per contract in that hour. If you're a 10 contract trader, that's $7,000. That's not monopoly money. That's not make-believe money. That's not the money that clowns throw out at the crowd at the circus. Okay? We're talking about stacking real Benjamins. Okay? You with me? Then in the next hour, we go from 22 to 28. That's another $600 per contract. So whether you're a 10 contract trader or a 20 contract trader, you can do the math. Then we go from 29 to 41. That's 12 points. That's $600. I'm sorry, I think I misquoted the numbers to you. I had my mind on the Russell. From 2014 to 2021, that's 7 points. Times $50 per point is $350. If you're a 10 contract trader, that's $3,500. So if I misquoted that, please forgive me. Here, now that's when you go from 14 to 21, that's 7. Up here, when you go from 22 to 28, all right? Now that's 6 points times $50 per point. It's $300 per contract. So for the 10 contract trader, that's $3,000. For the 20 contract trader, you can do the math, okay? The Russell is the one that pays $100 a point. The S&P pays $1 a point. The soybeans, the S&P pays $50 per point. Soybeans pay $50 per penny. All the other markets we talk about in ticks. The Russell, which is $100 a point, consists of 10 ticks. The S&P, which is $50 a point, consists of 4 ticks. The S&P pays $12.50 per tick, while the Russell pays $10 per tick. And all of a sudden, you're grabbing your head and you're going, wait a minute, this is too confusing. I'll never remember all this. Relax. You don't have to memorize any of this. It's all written down for you. And you're going to be trading the same markets day after day. You're going to pick 1 or 2 markets that you're going to focus on, that you're going to become a specialist in. And then you're just going to trade those markets over and over day after day. We use the same trade setup, the same indicators, and the same time frame on every market. So whichever one of the markets you choose, whether you choose the S&P, bonds, crude oil, the euro, soybeans, Russell, Dow, gold, you're going to use, let me say it again, the same trade setup, the same method to trade it, the same indicators, and the same time frame. The only thing that ever changes is the symbol, okay? That's all that changes is the symbol. This big move here from 42 to 62, how long did that take? It took 1, 2, 3 hours. That's 20 points at $50 per point. Won't confuse you anymore. That's $1,000 per contract. If you're a 10 contract trader, do the math. 20 contracts, do the math. Just don't make the mistake of saying, well, you know what? Man, that S&P, the margin's only $500. I was going to open my account with 10 grand anyway. Why don't I just start trading 5 contracts? Because you don't know how to trade 5 contracts. You don't know how to trade 1. Now, if you come to us and you're already a skilled trader and you're already trading 5 contracts, my question is, how can we help you if you're already doing it? Now, if it's a matter of you're doing it but you're not consistently profitable, fair enough. We're more than happy to help you with that. But why don't we do this? As you learn our methodology, why don't we step into the simulator for a few days, few weeks, until you can get yourself consistently profitable? Maybe you've been losing money for a while. Maybe you've come to us as kind of a last-ditch resort because you're running out of money pretty quick. All right, there's no reason to bleed out on the trading floor. Stop the madness. Let's go into Sim. Let us teach you our method. Once you get a handle on it, you'll show us that you've got a handle on it by making $100 per day in 10 trades or less, 10 days in a row. Once you do that, our blueprint will give you the green light to go live with 1 contract. Well, yeah, but I've been trading 5. Right, and losing money. Okay, let's build a solid foundation. What we want you to do with that 1 contract is we want you to increase your account balance by $2,000. Once you've done that, now we'll add a second contract. Once you have the second contract, we're going to go to the calendar, and on a predetermined schedule, we'll add our 3rd one, our 4th one, our 5th one. And as long as you continue to earn $100 a day in 10 trades or less, and every trade that you don't use on any given day out of your 10 rolls forward to the next day. Okay? So you end up with these rollover trades that on a rough day you can draw from. So you don't ever have to be stressed out. Oh, man, what if I can't make my $100 today? Well, you've got how many trades available? 30, 40, 60, 70? Because they just keep, like today, if it took you 5 trades today to make your $100, okay, that's great. You've got 5 you didn't use. That means tomorrow you got 15. And if it takes you 5 again tomorrow, fair enough. You're going to roll another 5 over. You see how it builds? Each day you get 10 new trades, and whatever you don't use rolls forward. Okay? So that's kind of the S&P. We had an alert last night. The Concierge trade alert last night said to be long above 2065. It ran up to 2074.50. That's 9.5 points, or 38 ticks at $12.50 per tick. 9.5 points at $50 per point. Well, we can do 9 times 5. It's $450, right? Per contract. Now, because there's no zone up here, you don't have a target. You don't have a specific place that you're going to get out. Maybe you're shooting for 10 points. Maybe that's your goal for the day. Our goal for you is 2 points. But maybe you've got loftier goals. That's fine. But what you don't want to do is you don't want to give this back. So, see, you're reaching for 10, but the market only wants to give 9.5. Don't ever be the guy who says, if I can't get what I want, I don't want nothing. We're going to trail our stop. So worst case is we're going to get stopped out with some nice profit. We may not get our 10. In fact, we can't get our 10 because the market only goes to 9.5. So by trailing our stop, we're going to get out with enough to cover our goal for the day, get ready for tomorrow. Now, you know our philosophy: important prices, important areas are almost always tested. Price got back below the trigger, triggered a second time. This time it ran up to 2073.50. Over here we got up to 2074.50. Here 2073.50. So this was 8.5 points. So 8 times 5, that's $400 per contract. All right. So that's the S&P. Now, something unusual happened this week. We closed 2 points above the highest weekly trading zone. Now, that's a rarity. Typically, historically, go back since we started publishing the zones, December 14th of 2009. The number of times that we've closed either above the highest zone or below the lowest zone, I can count without taking my shoes off. Now, if it happens a couple more times, I might have to take my shoes off. But so far, we're a little missed there. But that's not that big a deal because we didn't create the zones for that reason. We created the zones so that you could learn how to go zone to zone to zone to zone to zone to zone. And zones also work beautifully as targets, places to establish a stop, a number of different things. And as the more time that you're with us, the more you'll learn. Google CFRN, weekly trading zones. Okay, look at the charts, span the years. Google has archived them for us very nicely, and you'll be able to see exactly what we've been up to. All right, let's move on to the free trade. So before we go over the results of the free trade that was issued Thursday, the 22nd day of October at 2 p.m., we're going to just take a humorous detour. Although it's a very serious issue, and so I say humorous in that we'll try to keep it light. How much do traders make? Maybe you are a trader. Maybe you've been a trader for a very long time. Maybe you don't know what a professional trader even is. What's the job description? Well, you can Google obviously is a look what happens when you type define sovereign nations, wealth funds, define love, define pansexual, define culture, define hypothesis. That's another trick with Google, but that's not the trick I want to show you. You can find out what has been popular in the search culture of late by typing in a word like define. The word we're looking for is professional trader. Okay. Now, anytime you want to know the definition of a word, obviously you can Google it and you can go and look at any one of the different dictionaries that are out there, or you can take this little shortcut and just type in define and then the word, and you'll get, in most cases, a definition. With professional trader, that's not going to happen because it's 2 words. See, if we just put in the word professional, we get this, right? If we just put in this, we get that. But dictionaries don't do compound phrases. So, guys like me have to write an article. Definition of a professional trader. Okay? Now, this is one man's opinion. Talks about the IRS definition of a professional trader. It gives you a lot of other people's opinions as to what a professional or who a professional trader really is. And here's top 10 signs you may be a professional trader. Thank you, Jeff Foxworthy. So try that sometime. Type in define professional trader, and see what you think about the results, okay? And I'd love to hear your thoughts. Remember, one man's opinion. Now, I said we would do something and try to keep it light. Let's see if we can do that. Let's see if we can actually do that. I seem to have lost my funny button. Well, where'd it go? Okay, there we go. All is well. Found my funny button. So, how much do traders make? Think about that for a moment. Now, if you're already a trader and you've been trading for a number of years, then for you, it's not a question. If you consider yourself a trader, ask yourself, well, how much have you made? If you are in the process of becoming a trader, you've embarked on an educational program, maybe you've opened an account, wherever you're at on the journey, what do you think you're supposed to make? Because one of the greatest problems I find in working with new traders is quite often unrealistic expectations. In other words, you know, the emails you get about how the guy made $42,000 in his boxer shorts before breakfast while reading the newspaper, that kind of stuff. So, now these are actual figures. This isn't something hypothetical. This was resourced from Forbes magazine and also from Securities and Commodity Traders salary based on actual survey work done by owlguru.com, which may sound like a funny place, but it's actually a serious place, so check that out. And also Quora. I don't know if you're familiar with Quora, Quora. It's an intellectual type of site, so you may find some benefit in going there. Have a look, see what you think. So, how much do traders make on Wall Street? The average annual salary is $103,260 per year. The average hourly wage is $49.64 per hour. And you say, but wait a minute, I thought everybody on Wall Street made $1 million. Well, there are people who make a lot of money. But there's there's a few people that make a lot of money and a lot of people that make a little money. Now, the free trade that we put out last Sunday night had over $1,500 of available profit. You're never going to get out at the last tick. Not doable, okay? Not in the world of reality in which we live. In fantasy land, yes, but so of this 1,500, what's realistic? Well, you trail your stop. There'll be trades where you can take 300 out of that trade based on how you trail your stop. And trailing your stop the exact same way on a different trade might get you 900. The free trade we gave out Tuesday morning at 11 a.m. had over $1,000 of available profit. Okay? Now, since then, we've given out our third free trade of the week, and it had over $400 of available profit in it. It was an oil trade. We published it Thursday, the 22nd at 2 p.m. Eastern. It triggered today, the 23rd of October, in the 9 a.m. hour at 9:05, and this first swing down was 40 ticks at $10 per tick, that's 400 bucks. Now the second swing down, see, with our work, when you get back above the trigger, you've heard me say important prices, important areas are almost always tested. So here's the test, and another test, and another test, and even another test, and another test, and then these are tests that are going to end up getting you in trouble, okay? Now, we're very aggressive with our risk management. If you become a partner, you'll learn exactly how aggressive we are. And I mean, let me tell you, it's very aggressive. In fact, once you see it, once most traders see it who have any trading experience, they go, well, that's not possible. If you're that aggressive, you're just going to get stopped out all the time. You won't be able to make any money. Well, that's not true. So let's go on. Now, that really happened. That trade right there really happened. And the other trades from the week, do I have those up on this chart? I think I got them over here. I'll show you this chart. Okay. It's been 1 day, 12 hours, and 44 minutes since the crude trade was published. And then it triggered, and this is the chart I just showed you right here. You click it, blow it up, there you go. Okay. Now the trade that was issued on Tuesday was the Russell. That was this trade. Okay. And the trade, here's another look at it in a different time frame. Okay. And here is the crude trade from Sunday night. Globex opened at 6 p.m. Eastern, always does. We issued the trade at 7 p.m. Eastern. It triggered at 7:20. I try to set it up typically where there's a couple hours before the time we publish and the trigger hits, but contrary to popular belief, I don't control the markets, and so sometimes it will trigger sooner than I thought. And we could reach back further. The previous Russell trade had 148 ticks of potential profit. On the long side, that's $1,480 per contract. On the short side, it had $350 per contract potential. And before that, what did we do? Bonds was the free trade before that. That had $1,000 per contract of potential profit. And since we began this most recent free trade escapade, that's what's happened. Those are all of the trades. It's been 2 weeks, 3 trades each week, so it's been 6 trades. Now, those are not a replacement for the Concierge trade alerts. See, the Concierge trade alerts, that product, I send out 8 markets every night, Sunday through Thursday. 8 markets, 2 trades per market, so that's 16 trade setups. And as you've seen on our charts, most times a trade will trigger multiple times, like you see here and here and here and here and here. And you'll see some more in just a moment. All right. So, moving right along, how much do traders make? We already covered that page. Some might say that's a lot of jack. I should probably mention that the figures are based on trading one contract. Now, this quote-unquote professional trader that we've spoken about is probably wrapping his or her arms around 5 to 10 contracts. Now that's being quite conservative. So that changes things a bit. With just 5 contracts, the 1,500 becomes 7,500. The 1,000 becomes 5,000. It's not magic, it's just math. So our imaginary Wall Street trader, who is only trusted with 5 contracts, potentially clocked in our one example there, $12,000 over 3 days, 2 of the trades, the 2 that I highlighted right here. You with me? So that's handsome, right? Now, it seems to me that these figures and these figures, there's kind of a discrepancy, because if you do this 3 times a week, it certainly comes up to more than that. So where does the money go? Well, like I said, you have a lot of people who make a little money, and you have a few people who make a whole lot of money. Depends upon where you're at in the pecking order. Okay? Now, in New York City, what if you only grabbed half of that? 12,000, 6,000. Would that be fair? Depends on how big a broom closet you need to live in. Real estate's very expensive in New York City, in Manhattan. A broom closet, a studio can run you $3,000-4,000. 1-2 bedroom can run you $6,000, $8,000, $10,000. According to the study by these guys, the wise guys at owlguru.com, you should go there and check it out for yourself. And they'll tell you exactly how they gather this information. Okay? Really, let me just cut to the chase. What I'm getting at is this dream that some people have of going to Wall Street. Well, there's nothing wrong with that. But if you go to New York, go for the shows. Go for Broadway, right? Go to watch the ball drop in Times Square. Going there to earn a living as a trader, well, you're going to give up more than you're going to gain, unless you have some real specific game plan, all right? Anyway, according to the survey by the Owl, the top 10% average $187,000 a year, and the bottom 10% $32,000 a year. But let's not forget the other 80 to 90% of traders who fail and can't even make a full or even part-time income from this, which I sadly don't have a hard number on the statistic, but you've all seen the number. It's in Futures Magazine. It's in every media article that you ever read about trading. Either you lose all of your money or you stand in the 90% line. But that's not completely true, because there is the 10% line. There are those who survive. And so in your journey to become a trader, you've got to figure out, what do those guys do? What do the 10% do? What does that 1 out of 10 do that the other 9 fails to do? Oh, maybe they work for a hedge fund. Maybe that's where they keep the real money. The senior associate at a hedge fund earns an average salary of $99,000 a year, which is not bad money, and a bonus of $36,000. Vice president, $140,000 and a $100,000 bonus. If you own the hedge fund, basically $300,000 a year. Again, nothing wrong with that money. It's good money. So who are these clowns? Because this is not New York City, is it? They're traders. Really? Where? Arizona? What do they make? 2 points a day. There's no salary there. That's like working straight commission. Some of you may have experienced that in your life. So 2 points a day, is that much? Is that a lot? Can be. More than New York? Yeah, can be. Plus in Arizona, we actually keep brooms in our broom closets. We live in houses, and we have backyards. And your kids can have a little puppy dog. So can you try? Can you go to Wall Street and try to do this or this? Yes. Will you get hired? I don't know. Can you try this? Yeah, absolutely. Just go here. cfrn.net/apply. We'll let you come and hang out in our live trading room. Now, most of the firms that you go to on Wall Street, where everybody's not making millions and millions of dollars. But chances are they won't let you on their trading floor. But you can come on our trading floor. It's virtual. It's online. You can hang out for 5 days, 2 hours a day. That's all we're open, 9:30 a.m. to 11:30 a.m. You can watch us trade real money in real time in front of real people. If it's not too confusing and overwhelming the first day, and if you see the possibilities, then you can download our platform and our indicators, and you can practice what you just learned in the simulator. You get a $50,000 demo account with virtual money in it. You get to use our actual indicators, and you get to try. What you'll find that first day is what you really don't know about what you just saw. You saw a guy make some money, put on some trades, do okay, and he made it look pretty simple. Actually, the first day, you're pretty confused. And so, on that first day, what you do is make a list with lots and lots of questions, okay? The more questions, the better. On the second day, don't waste your time trying to chase behind him and click where he clicks, okay? Because if you do, your focus is on the mouse and not on the learning process. Watch what he does. Ask him questions. Why did you do that? What does that term mean? What's your goal here? What are you doing? Why are you doing it? What's up? Tell me. I want to know. I want to be a trader. I got 5 days to figure out if this is something that I can learn how to do. So ask. We can't answer the question that you don't ask, right? So ask lots of questions. When the trading room closes for the day, go practice for 22 hours until the trading room opens the next day. Come back, watch again, ask more questions. By the third day, you're probably ready to have a private mentoring session, and that's where we'll get together with you one-on-one in a private go-to meeting, and we'll show you our charts, and we'll look at your charts. You'll show us, myself or Michael, whoever we set up, whichever one of us you get, whoever's available when you schedule your time. You'll show us what you've been doing in the simulator. Now, don't be embarrassed and don't be shy and don't say, man, I don't really know what I'm doing. Well, that's why you're in the trial. And so we want to walk you through the steps, just one-on-one, so that you understand. And then when that mentoring session is over, you go practice some more, okay? After that mentoring session, it really should clear up a lot of issues. So by about the fourth day, you're kind of starting to feel pretty good about this thing. And when Michael's putting on and taking off trades in the live trading room, you actually understand what he's doing and why. You see, we only use 2 trade setups in the live trading room. We trade 6 different markets, but you're not going to trade 6. You're going to pick 2. S&P and the Russell, or maybe the S&P and gold, or maybe Dow and Crude. Whatever markets you want to pick 2. Focus on those. The only reason Michael trades 6 markets during the live trading room is simply to show you how much opportunity is available in all the different markets using just a very simple set of indicators. There's 2, one up top, one down below. Once you learn how to read the chart and then read the indicators on top of the chart, all you have to do from that point forward is show up, put on the trades every day, and manage the trades until you hit your daily goal. Don't want to make it sound easy because it's not, but it can be simple. Now the trade setups, there's 2. The one I personally prefer is the one where we pull back to the BBC, it's called. It's just a bull-bear cross. If price is above it, we're bullish and we expect higher prices. If price is below it, we're bearish and we expect lower prices. It's all really quite simple. Okay? And it's not that we haven't done the trick and the trend and the advanced decline and oh my goodness, and the stochastics and all those different things that everybody does. We've done that all. But our screens got so crowded, we couldn't see price anymore. So a few years back, we said, we're swimming upstream. We've got to fix this. And so the way we fixed it was we started getting rid of everything that we did not absolutely need. We hung on to some stuff, some proprietary things that we had coded. We made some changes to some of our basic tools, and that today is what is the CFRN proprietary toolbox. Okay, those are the tools that you'll use to put on and take off trades each day to reach your daily goal. You're not going to get rich overnight. You're going to stay in the simulator until you prove that you're consistently profitable. Once you're consistently profitable, you're going to go live with one contract. Once you go live with one contract, you have to increase your account balance by $2,000 before you can even add a second contract. Wow, this seems kind of like a slow boat. Will I ever get there? You know what? If you are disciplined and follow the steps, don't break the rules, you can get there in 24 months. Now, the goal of the 24/20 blueprint is to take you from one contract to 20 contracts in 24 months. Well, the beauty of what we do is that you are earning while you're learning, and you're increasing your account size or your trading size with profits you earn in the market. In other words, when you go from one contract to 2, it's not money from your 401k, or you're not taking another loan out with Aunt Ida. You're actually using profit you earned in the market to add the next contract. That's how you add number 2 and number 3 and number 4 and number 5. That's how you become a trader. Profits. The way some of these startups are run in Silicon Valley today and the way our government is run, printing money out of thin air. If you try running your trading business like that, guess where you'll end up? In the 90% line. Businesses can't survive without positive cash flow. Countries can't survive for too long without positive cash flow. Look around the world. Look what happened in Greece. That's just one example. There's more Greece to come. So let's get focused on what we can do with our trading. If you're serious about learning how to trade, we're here to help. Okay? Our 90-day mentoring program should give you enough. Well, the first 5 days, okay, those are free. We don't charge you a dime for the first 5 days. That should give you enough information to be able to determine whether or not this is something you can really learn how to do. These guys aren't messing around. This isn't some kind of magic act. We're not illusionists. There's no crystal balls. There's no gurus. This is learning to read a chart and learning how to trade. So in 5 days, you should see that and be able to make a determination if it's something you think you can actually learn how to do. If you want to do it, then you can enter into the 90-day mentoring program. At the end of 90 days, we hope that you don't need us anymore. Okay? A lot of the partners, in fact, most of the partners, like to stay connected, and you can be a part of the live trading room and the workshops and everything that we do from now till the end of time for a small monthly maintenance fee. Okay? The main thing is that you need to get that 90-day education, the mentoring program, where you have unlimited access to both Michael and myself, the developers of the methodology. We're only a phone call or an email away. We'll spend as much time in private mentoring sessions with you as needed, okay? Because we've done everything we know how to do to make this as simple as we possibly can, hopefully it's not going to take that many private sessions, because it's not rocket science. Now again, it's not easy, but it's not rocket science. So let me just show you real quick what happened today. Let's go to the... Oh, this is the S&P where I've put in, I kind of highlighted the areas, support and resistance. These weekly trading zones, okay? When we hit a zone, I've already told you many times, it's one of three things. You're going to get rejection, consolidation, or the occasional hot knife through butter. That's how it looks on an hourly chart, because price just whipped right through it. Now, in this particular case, we already did some consolidation, but typically when we get this move, we expect price to come back to that zone and do what it didn't do here. So come Sunday night or Monday, if you find us down in this area somewhere trading, don't be too surprised, because the market's calling for that. Okay? All right. Real quick, let's shoot through these markets. Already talked about the S&P. Here's bonds. Last night we said to consider being short below 158.05. At 157.05, that becomes $1,000 per contract for the day. Okay? ZB, Z5, short below 158.05. Okay? Now, how many ticks do you need to make your daily goal if you're trading the 2420 blueprint? You need 4. That's all. This is 32. 32 ticks makes a point from 158.05 to 157.05. That's 32 ticks. That's 1 point. 1 point in bonds, $1,000. Crude oil, we said to be short below 45.10. If we had made it down to 44.10, that would be $1,000 per contract. We only got down to 44.20. How many ticks do you need? See, from here to here, that would be 100 ticks, okay, at $10 per tick. But you only need 10, not 100. 10 gives you your $100 per contract per day. The euro, the 6E, we said to be short below 110.95. We got down, the last time I calculated it, I think here we were down 60 ticks. Yeah, we were down 60 ticks in this hour, okay? That's $750 per contract. That's if you got out at the swing low of that hour. But you probably didn't. You probably got taken out on the pullback. Nothing wrong with that. Ultimately, I think the swing low was 89 ticks. The euro pays 12.50 per tick. The Russell. Let's see what the Russell held today. All right. You know what? I've got another Russell chart. Let's look at that one. I mean, these are the zones. Everything's there, but I just want you to have a clearer idea of what happened. Okay. On the Russell, we said to consider being long above 1162. Show you. See? RLM, long above 1162, short below 1155. Okay. And so on the first move up, 1162, we got up to a swing high of 66.4. So from 62 to 66, $440 per contract potential. That's how much potential was in the first move. So what that means is you didn't make 440. That's how much the market made available. You got out of that whatever you're capable of getting out based on your skill set. I know I keep saying that over and over, but it's something that prevents you from having unrealistic expectations. So this move down 26 ticks, this move down 35 ticks, this move up 21 ticks. How many ticks do you need? Well, at $10 a tick, just like crude, you would need 10 ticks to make your $100 per contract per day. The Dow, the YM, it pays $5 per point. You need 20 points. The first move up gave us 124 points. We only need 20. The market gave us 124. Important prices, important areas. Here's the test. 86 points. Okay. So the Dow was very kind today. And the last market would be gold. And here's what happened today in gold. On the upside, the first move was good for 11 ticks. You need 10 to be done for the day. The next move, the market made 54 ticks available. Times $10 is $540. But guess what? Yeah, that's right. You're not going to get it all. It's going to pull back. You're going to get stopped out with profit. Okay? There you go. Very good. On the short side, consider being short below 1163. We dropped 44 ticks. It's $440 per contract. The only question is, at what point did you get stopped out with your profit? Okay? So that covers it. That's all the market. Oh, soybeans is the only one we didn't do. Soybeans today it was a tough day. 894 was the trigger. You need to get down to 892. Now in this hour we got to 92, but in this hour, see, you have to get down to at least 893 to move your stop to break even. So the swing low here was 93. So this was a stop out. This gave you an opportunity to make your daily goal. This got you down low enough to get your stop to break even. And this got you low enough to get your stop to break even. So not a great day in soybeans, but it was a day. Okay? And that covers it. Okay? So our free trade, once again, the one we gave out yesterday for how much? Free. That's right. When we say something's free, it really is free. Just like our free trial. Now, the Concierge Trade Alert trial, that costs you $1. $1. Okay? So wait. Because I try to put a lot of hands-on time on those who take that. We give as much hands-on time to anyone that wants it during the trial. But for reasons that I don't need to go into, If you want to just take the live trading room trial and use the platform, use the indicators, have private mentoring with Michael and I, that costs you nothing. Zero. If you want to be emailed the Concierge trade alerts on top of that, all right, it's going to cost you $1 for the week, $1. Okay? I'll tell you up front, if you decide that you want to become a Concierge client, it's going to run you $14.95, $14.97, 7 because the 7's like a magic number people always buy if there's a 7. I'm serious. There's people that teach this stuff. Don't waste your money. $14.97 per quarter. Okay, now that works out to $6,000 a year because there's 4 quarters in a year. Yes, right. We have an annual rate, $49.97. That saves you $1,000. Okay, now that gets you 8 markets every night, 2 trades per market. That's 16 opportunities if nothing triggers more than once. And as you've seen, they trigger over and over. But so that's what you get. Plus you get the platform for a period of time and the indicators. And you know what? Let's not even... I like to give you the price just so you're not sitting there during your trial preoccupied with, oh my gosh, this is awesome. I wish I knew if I could afford it or not. Don't worry about whether you can afford it or not. Worry about whether you can learn how to do it. Worry about whether or not you can put it to good use, right? Worry about whether or not this is what's right for you. The finances, the paying for the doggone thing, that'll work. If it's right for you, then that other part will work itself out. Okay? We got ways, all right? We know people. we'll talk about it, okay? But there's no sense fretting over something that hasn't happened yet. Because 2 days in, you might go, hey, you know what? I don't like you guys. Oh, okay. Or 2 days in, you might go, wow, this is awesome. I wish I could afford it, but I can't. Well, that's when we'll talk. We'll talk about it at that point. First, you need to figure out if it's going to be of benefit to you. If it's going to benefit you and you're ready to hunker down and study and work hard for 90 days to learn a new way to earn a living, then we have the tools, we have the knowledge. Let's not let a few bucks keep us apart. We'll figure something out. Okay? We don't take livestock. Just trying to keep it light. Now remember, the guys on Wall Street are not making quite as much money as you thought. So get those. It doesn't mean you can't make a lot of money. You can make as much money as how much? That's right, as your skill set will allow you to make. Let me give you just one final example as we part. If you made 2 points a day in the S&P, that's how much? $100. And if you were trading 10 contracts, that would be $1,000. On a 5-day week, that would be $5,000. If you work 50 weeks out of the year and take 2 weeks off for vacation, then that is what President Barack Obama says makes you one of the wealthiest Americans. $250,000 a year. Now, isn't it amazing how earning just $100 per day, if you're diligent, if you do the right thing, don't run off in the ditch, don't go wildcatting, don't start shooting from the hip, stick to the rules, chin up when you have a tough day, all that stuff. How you can this is the truly the land of opportunity has become the world of opportunity. Now, you won't get rich quick. Just get that in your head. You're going to have to work. You're going to have to be diligent. You're going to have discipline. You're going to have to focus. You're going to have to learn how to think in probabilities. You're going to have to shake loose from those preconceived notions that you have. Maybe you're holding on to some ideas about trading that have not served you well. I have guys from time to time, they have trade setups and strategies and indicators that have been bleeding them practically penniless for years, but they don't want to let go of them. I'm like, why do you want to hang on to this? Well, because I saw this guy and he taught me, and, I just believe. Well, okay, but, what was it? Remember that commercial back in, I think, the 80s, Where's the Beef? Where the lady looked at her burger, she lifts the bun and said, where's the beef? I mean, if it's a good methodology, if it truly has a consistent, or if it truly has a definable edge, and you know how to apply the edge, and you do apply it, if you're not profitable, you're not profitable, okay? Now, one of two things. Either there is no edge, or you've somehow missed exactly how you apply the edge. You'd be amazed how often I go into a mentoring session with someone, and remember, in mentoring sessions, you're going to look at my charts, plus I'm going to look at your charts. And I'll look at someone's, when it's time for us to shift and look at their charts, I don't even recognize what I'm looking at. I'm like, what is that? Oh, these are my charts. Yeah, okay, well, and what do you do with those? Well, I use them to trade every day. Why? Where'd you get that? I mean, I'll see our indicators up there, but there's like 9 other things. I'm like, what? I recognize the CFMA1. I recognize our indicators, but what's with the other stuff? Oh, well, this is, from that guy, and this came from that company, and this over here, I paid $5,000 for this thing. Really? And how much money have you made with it? Oh, well, it's not that kind of a thing. It's not? Okay. Well, what's the value? Well, I can't explain it to you now, but boy, you should have heard that guy talk about it. He was so dynamic, charismatic, and powerful. And he had a lot of swagger when he walked. My goodness. Price goes up and down and up and down and up and down. Sometimes it trends higher and sometimes it trends lower. With our methodology, we never look for a high or a low. We never buy or sell a high or a low. All we're looking to do is take a bite out of the middle. I mean, our traders have been known to fall asleep at the mouse. Is it that boring? Once you get the hang of it, kinda. Because you're just doing the same thing over and over and over. Well, man, where's the excitement? Where's the adventure? I don't know. It's not here. I mean, if you want to gamble, go to Vegas. I mean, here's a bearish cross up here. Right there. And when you get a bearish cross, what we want to see is we want to see price pull away from the BBC. That's this green line. And then price pulls back to physically touch it. And then we get a down close. That's that red candle right there. And then we sell the open of the next candle. That's what I mean about it's not easy, but it can be simple. Bearish cross, price pulls away, price pulls back, down close, sell the open of the next candle. Okay? Price pulls away, price pulls back to physically touch, down close, sell the open of the next candle. Now price has fallen from 2073, this is the S&P, all the way down to 2066. From 73 to 66, what's that, about 7 points? The average swing in the S&P is 3 to 5 points. So once price has fallen more than 5 points, I'm not interested in taking a short until price has a pretty decent retracement. Because it's going to try to swing 3 to 5 points in the other direction. The swing low here, it's 2066, 2070. So 4-point swing, average swings 3 to 5 points. That information right there, that should turn your trading around in and of itself, just knowing the average swing is 3 to 5 points in the S&P. What if you never took another trade that had already run the course of 5? Now, am I saying it never goes 10 or never goes 20? No, it does all the time. But you see, when we learn certain things about trading and about the market and about reading a chart, and we apply them in a consistent manner, and we only take the trades that are truly high probability in nature, maybe someday we can be that guy, the best trader on the planet, who is profitable 7 out of 10 trades on average. We could be that guy. Like your mother told you when you were growing up, you can become president. I mean, if I'm not going to go political. I'll leave that for the radio show. Okay? So on a bullish cross like this, well, what would you do then? Bullish cross, price pulls away, price pulls back, up close, price pulls away, price pulls back, up close. Well, then you'd buy the open of the next candle. That's this guy. You mean I'm going to buy 2069? Yep. And it's going to draw down 5 ticks? Yep. Then what? Well, you bought 2069. You really wanted to go to 2071. But on this move, it doesn't. It goes to 2070.50. So instead of 8 ticks, it gives you 6 ticks. Okay? Well, at 4 ticks, we take our stop to break even, and then we begin to lock in profit as price moves higher. So we're looking for 8 ticks to make our $100 per contract per day. This trade hands us 6. Are we going to get 6? No, because we're looking for 8. However, we should get 3 or 4 ticks. Okay? Remember, at 4 ticks profit, we move our stop to break even. And then at 5, lock in 1. 6, at least lock in 2. I like to see a guy lock in 3. Lock in 4. What if you get stopped out? All you got to do is take another trade and pick up the other 4 ticks. You're done for the day. See, that's where we make it complicated. Well, I got to get this aligned, and that's got to be over here, and Pluto needs to be in Mars, and oh my goodness, and I'm not knocking the guys that trade the stars and not the bars. I don't like to knock anybody. It's like my grandma said, if you don't have something good to say, don't say anything. And so, yeah, I'm all for that. I don't need to knock anything. Okay, nothing needs knocking. Just trade what's in front of you. I mean, do you see how this repeats over and over? Bearish cross, price pulls away, price pulls back, down, close, away you go. And I can take this and I can make it look even simpler. In theory, my chart will open. I'll turn off this line, and I'll turn off this line, and then I'll just have one line. Yeah, okay. And so, with this style of trading, which is something I'll teach you once you become a partner, I'm going to be short the open of this candle right here, which is 2066. Yeah, 2066. So if I get short 2066 and I'm just looking to make my $100 per contract per day, where do I need price to go? $20.64. In here at 66. Out here at 64. Done for the day. Now, is there enough volume to support a man trading 10 contracts? Well, on the candle I entered, theoretically, because I didn't take this trade, I'm just pointing one out. Now, each one of these candles, it's not tied to time, it's not tied to volume, it's tied to price. It says 4 ticks, but you see the R, that stands for range. What that means is every one of these is exactly 4 ticks tall. So it's not a fast chart that goes flying by like a 4-tick chart. Okay, how long, people always say, well, how long does it take for a 4-tick range candle to form? Well, you can never get the right answer by asking the wrong question. It's not about time, it's about price. It's on the 5th tick in any direction that you'll create the new candle. Okay? Like over here, when we finally got that 5th tick in the up direction, we create a new one. Every candle is 4 ticks. See the symmetry it gives the chart? It doesn't have that jagged look of like a 1 minute or 5 minute. So that's what we use in the live trading room. And so this candle could have taken 4 seconds, 4 minutes, or 4 hours. Okay? Based on the time of day, it'll take as long as it takes. And you can always, like down here, see, that candle formed at 10:12. The next candle formed at 10:12, 10:13, 10:13, 10:13, 10:15, 10:15, 10:16. So it's about a 3-minute trade. Okay? And the volume, the second candle of the trade had 8,000 contracts, and then 2,000 contracts, 2,000 contracts, 7,000 contracts. So in answer to the question, can you trade 10 contracts or 20 or 100? The answer is yeah. But what you can't do if you're going to survive is you can't just go in here trading whatever because you've got money in an account somewhere. If you do anything other than learn how to become consistently profitable in the simulator before going live, and then go live with the smallest quantity, which is 1 contract, and increase your quantity only with profits you earn in the market, that's the only way to make sure you don't end up in the 90% line. Now, I'm not saying that if you do that, you can't end up in the 90% line, because, I mean, if we work hard enough, we can do anything, right? World of opportunity. Because of the way we wrote the 2420 blueprint, the way we designed our methodology, if you want to blow up and blow out, you got to work really hard to do that. It's so much simpler to just follow the rules. And following the rules actually keeps you in the business long enough to learn the business. So, I hope I've helped you. Have a great weekend. God bless. Take care. See you in church on Sunday. And I'll see you Monday morning in the live trading room. All right? Take care. Bye-bye. Oh, if you need anything, support at cfrn.net. Or you can call 949-42-EMINI. Yes, you can sign up for the trial over the weekend. It's not a problem. Everything's sort of automated. But if you need help, email or call, and we'll be happy to help you. You can sign up right from the home page of our website, cfrn.net, upper right-hand corner. You'll have the whole weekend to get the platform downloaded, the indicators installed. You'll be emailed some videos and some information to go over between now and Monday morning. We'll give you plenty of stuff to keep you busy until the live trading room opens on Monday, okay? All right, that's it. I'm done. Hope you have a great weekend. Bye-bye.